We build on what matters. We build on relationships. We're Home Matters, for people who want more.
This episode of Home Matters has been brought to you by Todd Smith of Capital Financial Partners.
Hey guys, I've got with me today Todd Smith, Capital Financial Partners. He is going to help us work through some homeowner insurance policy questions, mainly to the point of what affects the price of the homeowner insurance. And thanks for coming.
Well, thanks for having me back. The number one cost effect for homeowners insurance is the actual value of the home. If it's $1 million home, you're going to pay more because what we're doing here is we're insuring the risk of replacing that home. That's the worst case scenario for having a homeowner's policy is if you had to replace the entire house. So the cost of the house is the number one reason for the price. Other factors come into play, such as what your insurance score is, and it's sort of like a credit score. Credit does get involved in that, but if you are very prone to having claims, that follows you into your insurance score, and believe it or not, that actually affects the price of your policy. It may even deter you from getting a policy. So it's quite critical that you manage your claims properly.
Yeah.
You just don't call the insurance company for any and every little thing.
Right. It's kind of damned if you do and damned if you don't.
Well, that's right. That's right. Well, some people will call and they will process or start the process of a claim, but then they never file a claim. Well, believe it or not, that stays on your record. So it's almost best to call me as their agent and, okay, should I file for a claim or not? If it's a $250 few shingles that came off in front of your house that you think the insurance company should pay for it, well, that's going to halt you especially when you get your renewal.
Right.
And everybody gets their renewal either 6 months or a year after they get their policy. And if there's a claim involved, the price of that policy when it renews is going to jump up. But that's the main reason or the main factor in the price of a policy is really the value of the home.
And now I was thinking about something you and I had talked about earlier about the roof. Does the roofs, again, sometimes will knock somebody out because of the age of the roof, but does the age of the roof also affect what the cost might be?
Most definitely.
Okay.
We had a customer the other day that had a 19-year-old roof, and we had a tough time finding a carrier, but luckily, because we have so many carriers, we were able to find one. Well, that policy went from being around $1,100 for the whole year for this house to right at $5,800. It was almost like they were pricing a roof replacement into the policy because they knew that it's probably going to have to get replaced pretty quickly. And when a roof gets that old anyway, it doesn't take much to do damage to it. The shingles dry out and just a little bit of wind and it'll start getting some damage. So they know that and they're going to price the policy accordingly.
Yeah. Well, that's good to know. And I thank you so much. And again, I know if y'all seen anything that Todd and I've done before, because of your being an independent agent, you are able to help people better than just having one carrier, because you have many carriers you can help people.
That's right. We have at least 10 what we call standard carriers, and each one of them has a different appetite. Each one of them likes a little bit different type of insured that they want to cover. And then we've got anywhere from 75 to 100 non-standard carriers that we literally can insure anything. There's nothing we can't insure.
You're just going to pay for it, but including the insurance.
That's right. we hope that they're going to fall into that standard market
Sure.
because when you get into the non-standard market, you pay for it. One of the things that is starting to fall into the non-standard market is coastal properties. Anything within 30 miles of the coast is starting to go into the non-standard market. It's just such a high risk for the standard carriers to stay in that market. A lot of them are just leaving it.
Huh.
It only takes a couple bad storms and put an insurance company out of business.
Yeah. Mom, you hear that? You better move.
Wherever you are, Mom, get out of there.
Thanks so much.
You're quite welcome.
This episode of Home Matters has been brought to you by Todd Smith of Capital Financial Partners. And by Angela Barrett at HomeMattersSC.com, building on what matters to you.